Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify, or wherever you listen. It's Wednesday, the 14th of May in London. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, the US prepares to unveil massive AI chip deals with Gulf states as the Trump administration throws out Biden-era restrictions.
NATO sketches out a plan to meet President Trump's call for 5% defence spending as the UK and EU remain locked in talks over a common security pact.
Plus, Milan moves. Italy's financial capital proves to be an early winner in the race to attract wealthy investors after the UK's non-dom rollback.
Let's start with a roundup of our top stories.
The United States is clearing a path for Saudi Arabia and the United Arab Emirates to ramp up AI spending as the US president uses his visit to the region to forge deeper business ties with the Gulf states. Under agreements expected to be unveiled in the coming days, the nations are poised to secure broader access to advanced chips from Nvidia and AMD, which are considered the gold standard for running AI models. Bloomberg's executive editor for global tech, Peter Elstrom, says the deals should not be understated.
This is a very big deal. I mean, at a high level, it's a sea change, really, in U.S. policy towards some of these countries and their access to American technologies, including AI. The Biden administration had implemented a series of curbs on what foreign countries could buy, especially AI chips. The most advanced ones are made by Nvidia, of course. And the Biden administration had a very complex approach, a framework that they passed the last week in office, where under this rule called the AI diffusion rule, there are 3 tiers of different countries. You get different access to different levels of chips under that framework. The Trump administration has now just thrown that out.
Peter Elstrom referring there to the Trump administration's plan to overhaul regulations on the global export of semiconductors used in artificial intelligence. The move would end the Biden-era approach, which had drawn strenuous objections from US allies and companies including Nvidia and Oracle.
In Riyadh, Saudi Arabia's capital, President Trump was joined by Crown Prince Mohammed bin Salman in hailing closer commercial relations. The two touted plans for $1 trillion in commercial deals. The conference signage listed deals totaling just over $300 billion. Earlier on Tuesday, the White House has said the figure was $600 billion. Now, the $1 trillion figure roughly matches Saudi Arabia's entire gross domestic product. Bloomberg's Nick Wadhams explains the details of these agreements will be important.
The question here is really trying to figure out how much of these commitments are just on paper and how much of them are actually going to go through. You know, that big top line number of $600 billion, that fits with what Saudi Arabia had said it wanted to do over the next 4 years and enhance trade and investment with the U.S.
Bloomberg's Nick Wadhams in Washington. The White House says the deals aim to boost U.S. industries in energy, defense and tech, as well as to provide access to key global resources without giving full details.
The US president says a luxury jet offered by the Qatari government will be used as a temporary Air Force One, indicating he plans to accept the gift despite the legal and ethical concerns. On social media, Donald Trump wrote that only a fool would not accept the aircraft, as he criticised Boeing's delays in delivering new jets for government use. Speaking in the US Senate, Democrat Minority Leader Chuck Schumer questioned the terms of the deal.
What security modifications would be needed to ensure a foreign-sourced Air Force One is safe to use? If this is, as President Trump promised, a free jet, will the Qataris pay for those highly sensitive installations, or will American taxpayers cover the cost?
Chuck Schumer speaking as the move has also sparked backlash among some of the president's supporters. Commentator Ben Shapiro asked how Trump voters would react if a Democrat had done this, while far-right activist Laura Loomer posted on X that the gift would be a stain on the Trump administration.
NATO allies are in talks over how to boost defence spending in a way that might answer calls from US President Donald Trump. Bloomberg has learnt that military negotiators are discussing how countries might reach a target of 5% spending, 5% of GDP on defence in the long term. Bloomberg's James Woolcock has more.
1 in 4 NATO allies still don't spend 2% of their GDP on defence, so setting a target of 5% would be a major jump. But countries want to give President Trump a win at a major NATO summit this June to keep the US committed to the military alliance. That leaves talks now centred on how countries would afford it, what counts as defence spending, and how that target might be enforced. In London, James Woolcock, Bloomberg Radio.
The UK Defence Secretary says talks with the European Union about a common defence pact are at the hardest stage. Britain has been pushing to join a €150 billion scheme for rearming Europe. In an exclusive interview, John Healey told Bloomberg he hopes for a deal by Monday.
The security challenges we face in Europe require the UK and the EU to work closer together. We've been willing and ready to do that. And we've said from the outset that we're ready to strike an agreement if the EU will do so too. So I hope we'll see on Monday what the European Union has now offered as a security and defence partnership struck with the UK.
The UK Defence Secretary was speaking at the London Stock Exchange, where he was rallying investment for defence companies. Britain is committed to increasing defence spending to 2.5% of GDP by 2027 and up to 3% in the next decade.
Ukraine's President Zelensky says that he stands by his plan to hold direct talks with his Russian counterpart in Turkey on Thursday. Speaking to reporters in Kyiv, he said that he expects strong US and European sanctions on Russia's energy and banking sectors if President Putin fails to show up for the meeting.
It means that Russia is not ready for diplomacy. No time for playing games on the technical level and etc. And it's meant only one thing, that we need to be more strong, unite and tough on them.
Volodymyr Zelensky speaking there as Bloomberg reported that the US has a sanctions package ready to go should President Trump require it. Meanwhile, Russia's deputy foreign minister said that the Kremlin is ready for serious talks in Istanbul without confirming whether Putin would attend.
The UK's markets watchdog plans to relax rules on how insurers sell policies to large companies. The Financial Conduct Authority says the market could benefit from a simpler, more straightforward system that reduces cost and encourages competition. The proposed changes include reducing review frequencies, giving flexibility in appointing lead insurers, and eliminating duplicative reporting and training requirements. According to Lloyd's of London, the capital's insurance market is the biggest global hub for commercial and specialty risk, sourcing over $91 billion in premiums annually.
And those are some of our top stories for you this morning. Let's get to the markets. Asian tech stocks gaining ahead of earnings from Alibaba and Tencent, China's most valuable company. Chip makers are gaining on plans from Nvidia and AMD to invest in Saudi Arabia artificial intelligence. And Nvidia's shares up 11.8% in 2 sessions to a 10-week high. US benchmark stock indexes erased their 2025 losses as of yesterday, but European stock futures this morning are in the red, down 0.2%. US equity contracts inching just a little bit higher. Treasuries little changed at 4.47 in terms of 10-year yields. And the dollar, on Monday we saw the move in the Bloomberg Dollar Spot Index, the best single day rally since the election of President Trump in November, but the dollar broadly weaker this morning, down 0.1%. Those are the markets.
In a moment we'll bring you more on Donald Trump's trip to the Middle East, plus why Italy's plan to lower London's wealthy non-doms is paying off for Milan. But we also unusually have a book review for you this morning.
I like this one. Look, Bloomberg Pursuits covers everything for you, and they've highlighted a new biography that I just think is fascinating. I've got to read it. Claire McCardle, the designer who set women free. Elizabeth Evitts Dickinson has written this biography, and she's written about the biography for us on Bloomberg. So just to kind of give us a taster, if you don't know this name in fashion, she is a totally fascinating woman. She created basically casual women's clothing, the whole of American women's fashion in the 1930s and 40s.
But the story also is fascinating because of the time period that it traces back. So from pre-war, where Claire McCardle came up with this idea of making fashion essentially more functional for women, tracing it through the war period and how she was able to popularise this as America, became more wealthy, as there was greater, for example, travel, trying to create clothes that were functional for travel as well. It's such an interesting juxtaposition with the conversations we're having now now about how people are dressing in the workplace, you know, as people came back from the pandemic and had to struggle back into their suits. Not that I'm speaking from personal experience.
Look, if you are getting ready in your separates, in your trousers or your skirt, your top and your jacket to get into the office, well, of course, Claire McCardle was the person who created that for women. Have a read about it. We'll put a link in our show notes to that story.
Well, President Trump's trip to the Middle East paves the way for the AI future for Saudi Arabia and the United Arab Emirates, with chip deals for US tech companies Nvidia, AMD and many others. Joining us now for more from Riyadh is Bloomberg TV's Horizons Middle East and Africa anchor Jumana Bersetchi. Jumana, so we've had day one of the trip already and a huge need of artificial intelligence and other deals.
So many deals announced. I've got to say, I was in the room yesterday when both the Crown Prince Mohammed bin Salman and President Trump were speaking, and the feeling was quite electric. Both certainly know how to play to the crowd. And as we had anticipated, lots of deals, plenty of agreements, MOUs signed between the two countries. The headline figure that the White House released ahead of that speech was $600 billion in investment pledges had been agreed to between the both sides, though later on the Crown Prince said that they are looking to increase that number to $1 trillion. There's some question marks as to how we're going to get there with the state of Saudi finances. But in terms of other deals, $300 billion worth of commercial agreements were agreed to essentially at this Saudi-US business forum that was taking place in parallel to President Trump's meetings yesterday. And some of them include AI, as you mentioned, a massive deal between Nvidia, AMD, and the Saudi AI investment firm Humane, which was announced this week. They're going to be providing some high-end chips to power the AI centers in the Middle East and within specifically Saudi Arabia at this point. But on the back of that, you did see a big rally in chip makers on that news. It came as a bit of a surprise, especially because it means that the Trump administration is watering down some of those chip export controls. We also had a massive defense deal announcement. The White House said it was the largest in history, $142 billion worth, Saudi Arabia pledging to buy more arms and weapons from the U.S. We had an MOU in the energy space. We also had an announcement from an aviation leasing company owned by the Sovereign Wealth Fund. They're looking to buy about 30 Boeing 737 MAX jets. So plenty on the commercial front. And of course, many industry leaders were there as well, including the likes of Elon Musk.
Gosh, it must have been fascinating to be in that room and to see it, Jumana. But yes, as you say, disagreement about exactly how much money this is really going to equate to. There's also another issue, though, that I want to touch on. What is the view in the Gulf nations, amongst all of those people that perhaps you were talking to, when it comes to the gift of a Qatari luxury jet to serve as a new presidential plane?
Now, I will tell you, almost everyone I've spoken to is slightly frustrated that this news came out because it took a lot of attention away from some of the other big deals that they were planning on announcing this week. I think there's been a lot of controversy about the story that came out over the weekend. It raises a lot of legal and ethical questions as to whether or not the U.S. president can actually accept a gift of this monetary value from a foreign government. And technically, under the Constitution, they're not allowed to accept a gift without congressional approval. So definitely raises some legal questions. President Trump has confirmed that the Qataris have made this jet as a gift offer, but also as one of a temporary nature. The Qataris have said that it's still in discussion phase. And if they were to offer it, it would just be as a loan as opposed to an outright gift. And then the Trump administration has said that ultimately it would end up being a part of the presidential library or gifted to the defense ministry. So still, all of that is going on in the background. Of course, President Trump will be making his way to Doha later this afternoon. And over there, expect more deals as well, and perhaps a little bit more focus as well on the regional security front, because today in Riyadh, he's going to be presiding over a GCC leaders summit. Unclear exactly which leaders will be present, but we can expect more headlines today about the geopolitical focus of the Trump administration as opposed to pure deals coming out of Riyadh.
Okay, Jumana Bersetchi, host of Bloomberg TV's Horizons Middle East and Africa. Thank you for joining us from Riyadh.
Now, it's only been 6 weeks since the UK's non-dom tax regime ended. It gave wealthy individuals favourable tax treatment for overseas earnings. Now Italy is proving an early winner in the race to attract all those wealthy investors from the UK. And Bloomberg's ultra wealth reporter Ben Stuples joins us now to discuss this. You've been reporting on this. Good morning, Ben. The Italians have a name for the plan. I'm not going to attempt it because my Italian's rubbish. What are they offering people who move there?
I'll have a go, Caroline. It's Svuota Londra, which translates into English as empty London. I guess it's not the official name, but it's certainly known in private wealth circles there. And crucially, it's actually almost a copy and paste of what Britain offered. So Italy has offered this. It's not brand new. They've offered it since 2017. But at the time, it was very much a deliberate attempt to copy what Britain has offered for more than 2 centuries, which is tax breaks on local earnings and income, tax breaks on overseas earning and income. And that's really attractive if you're a global elite earning millions and millions of whatever currency you're earning from a global portfolio. And you can be based in an attractive jurisdiction. So that's the irony here, that Italy is actually attracting a lot of individuals based on copying very much what Britain has offered. And England and Britain getting rid of it last month has turbocharged that program for Milan and Italy more broadly.
So how well is this working? Who's moving to Milan?
Stephen, we've got everyone from former CEOs of EMI Music to billionaire entrepreneurs like the likes of Nassef Sawiris, Egypt's richest person, a co-owner of the Premier League football team Aston Villa. And in between that, there are members of dynastic fortunes moving as well. So what we're seeing here is a whole spectrum of what we would call London's billionaire economy, relocating, upping sticks from London typically to Milan, typically. And you can imagine, of course, that they're also bringing with them their families. These are all individuals typically in their 50s, 60s. They're at that stage of life when they've got kids normally. And you can imagine the ripple effects of this are going to spread across the UK, but the fact that they're not here anymore.
Yes. So is Milan booming then? What does it mean for the Italian economy maybe overall? It's probably it's not just Milan, as you say, maybe Rome too, but what does it mean for Italy overall?
What's really interesting here is that it's not just the individuals now moving. On the back of that, we're seeing for example, private members clubs opening up in Milan. We're seeing luxury hotels thinking, oh, you know what, maybe we should boost our presence there as well. And some of the top City of London law firms like Charles Russell Speechley, as we report today in our piece, they've also recently opened up offices there in Milan. So what we're seeing here is the whole ecosystem that London has curated really carefully. I would say certainly over the last century, we've created that ecosystem, the private wealth ecosystem, across Mayfair, Chelsea, Knightsbridge, you name it. And now that whole space is seeing a similar opportunity in Milan. It will be interesting to see how the local population increasingly understands and responds to this. Is it going to increase local housing prices, for example, as the housing market turns red hot? That's often been a criticism in London, that non-doms have pushed up housing prices. So I think in some ways this is really good for Milan, but it'll be very interesting to see how this develops as an increasing number of typically previously UK residents end up living in Milano.
Yeah, perhaps a boom also for Italian lessons for a lot of these people as well. I mean, where is Milan competing with, Ben? You've reported on this story extensively. Where else are they choosing when it comes to locations outside the UK?
Yeah, it all depends on the individual. But yeah, you're right, Stephen. There are some other sort of European wealth hubs within Europe. We've got Greece. They've actually taken a similar route to Italy and created a similar regime to what the UK has offered for the last 2 centuries, and another 15-year regime that allows tax breaks on your overseas earnings and income. But more broadly, we've got Monaco. That's like sort of, I would say, the long-held tax haven in Europe. That's always been known as that. But more broadly as well, going further than Europe, we've got the Middle East that's really making a concerted effort to court some of the world's rich. So that's Abu Dhabi, Dubai. So that is why I would say are the main rivals right now. And Switzerland is always sort of known as Switzerland's always in the pack. It doesn't have to market itself these days. It's just known as a great global wealth hub.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.